We have a bit of a housing market shakeup. Rates are down, supply is down. You will not believe what is happening with the CMI. We're going to take a look at that today. Plus, 35% of the country is seeing price drops. So we're going to check that out. What areas are most affected? Let's get into it. Thank you for joining me this week, you guys. So look at this table of the CMI. We look at this every single week, usually a lot of red arrows. This is a lot of green arrows. Things have shifted a little bit with the CMI overall. And the reason for this is our supply is dropping. And I'm going to show you what that looks like here in a second. But pretty much every city except for Tempe, Surprise, and Maricopa all showed month over month gains for sellers. Now, keep in mind, anything under 110 on the CMI is considered a balanced market or a buyer's market. And so really, everything from Scottsdale down to Maricopa is not in a seller's market. However, we do have Cave Creek, Chandler, Fountain Hills, and Paradise Valley, all technically in seller's markets. All have seen some pretty big moves in the direction favorable for sellers over the last month. Cave Creek, 25%, Paradise Valley, 37%. We've been talking about Paradise Valley because their supply has been going down so much. So that is a big factor in this change towards the seller's market. But then we have a lot that are actually in a balanced market too. Scottsdale all the way down to Gilbert, and then still some buyer's markets, but a lot of green arrows there in the buyer's markets, meaning that they're moving closer to a balanced market over the last month. Now, the average change month over month this week was actually 6.9%. Last week was 4.5%. This is week, I think, 3 or 4, where we've seen a change in a positive direction, the number being positive versus negative. And we're seeing a lot of negative changes month over month. So now we're at 6.9%. That's almost 7% month over month when we were seeing negative 2.5% every single week or somewhere in that range. Now, the Cromford report is saying that the surprisingly low job creation numbers published last week caused a sudden downshift in mortgage rates. We're going to talk about that here in a moment. And this should provide a mild improvement in demand, but it's too early to detect right now. If rates stay at this level for a while, we could see some discernible improvement in demand, which along with the falling supply would justify a little more optimism for sellers. Like I said, we're seeing a little bit of a shakeup. We've got the supply going down. We have rates going down. We're seeing this improvement in the CMI. But they do say our concern is that once temperatures start to cool at the end of September, we're likely to see the falling trend in supply come to an end. At this point, we'll have to watch carefully to see what new trends develop. So if we look at the overall CMI, we're at 75.7, still in a buyer's market. But this supply has gone down to 100. So supply is now at this normal range of 100. Demand 76. That hasn't changed all that much. It's bumped up just a tiny bit. But we're still in a buyer's market. But this has been improving a little bit. And you can obviously see that with all of the green arrows across all of these major cities. Now, if we look at what our supply looks like, it is clearly going down, and started to see that trend taking place at the end of May. It's been a little bit up and down, but here we are today sitting at about 23,900 active listings on the market, whereas in May we were closer to 26,000. So that shows a little bit of what's going on with active listings here in the Phoenix metro area. But if we look at what's been going on nationally, they're seeing the same type of trend. So according to this article from Housing Wire, did lower mortgage rates already lower housing inventory? This article is saying last week we saw an actual decline in week to week, which is rare for this time of year compared to recent years. This is written by Logan Motoshami, who's tracking the inventory every single week from a national standpoint. And he's saying that for now, I believe it's a combination of things: lower mortgage rates, new listings data declining, and frustrated home sellers taking their homes off the market as they're not getting the price that they wanted. Unless mortgage rates rates rise again, we've probably already seen the peak in growth rate percentage of inventory in 2025. A few weeks ago, I was sharing one of his articles talking about the growth rate of inventory, where he's comparing year over year and how much inventory is added on a weekly basis, and really trying to see that we're adding more this year compared to previous years. And we did hit that mark earlier this year, but it started to taper off. He says he was actually shocked that inventory fell last week. It's consistently grown for the first week of August in recent years. Now that mortgage rates are below 6.64%, is that the main reason? He doesn't think so. The growth rate of inventory has been slowing the last 2 weeks of June. After waiting for 2 weeks of July 4th to work out of the system, things stayed on the slow growth side, but he didn't expect to see a decline. So what does this mean for you if you're a buyer or a seller? Well, as a buyer, inventory is shrinking a little bit, but not to any extent where it's going to cause a ton of competition, at least not at this point. And if you're a seller, that's clear that some homes are being taken off the market, whether they are, taking a break or have just decided it's not the time for them to sell because they weren't successful. Whatever the case may be, you may have an opportunity now if you actually do need to sell because you don't have as much competition. It's still going to be competitive. However, there's obviously a trend in decreasing inventory, not only here in Phoenix, but nationally, which means it could be a better time for you to be listed. If you're just curious about what your home value could be, you can check the description below. I have a link to an instant home valuation. Now, that said, we are still seeing prices coming down. I was just speaking with a client the other day who's thinking about listing their home, and I was looking at the change in prices in their area since the time that they bought their home. And unfortunately, prices have come down about 4% in that area specifically. And we're seeing that in a lot of different areas overall across the valley. We've seen about a 4% decline in home prices since the spring. Now, according to this article, home prices are falling in 35% of the country. Not super surprising. They say resale prices are down compared to a year ago in 53 of 150 markets that they track. New home prices, including builder concessions and incentives, have fallen 1.5% versus last year, as builders have been caught with too many completed unsold homes for the first time in many years. And so one of the things this article is talking about is how the builder prices are much weaker than resale prices. And they're getting hit a lot harder because they do have more inventory than they really need right now. So as they talked about this new construction is exceeding job creation in most areas. The supply of newly built homes is outpacing new demand. Home builders are lowering prices and payments to find demand. And we've talked about this, the number of incentives that are out there, and even seeing some of those base prices coming down in various communities. You can really get a pretty good deal on new construction right now if that is what you're looking for, because builders are pretty willing to negotiate. By the way, if you are curious about new construction, you can check the description below. We have a link where you can check out new construction homes throughout the valley. This article is tracking different areas of the country. They say price weakness has expanded across the Southeast, Southwest, and West Coast. Even some markets in the Midwest and Northeast, where tight supply previously supported strong pricing power, are seeing price appreciation slow rapidly. Obviously, the job market has a lot to do with this as well. So employment growth has slowed, and some markets are losing jobs compared to last year. Charlotte has seen job growth year over year, San Antonio job growth, as well as Salt Lake City. But the Bay Area is seeing job losses. They say high income sectors that typically drive new home purchases, like information, financial activities, and professional and business services, are actually experiencing the steepest losses. So they go on to say what it means for you as a buyer or a seller. As home buyers, the shift creates opportunities for those with more stable jobs, more inventory, motivated sellers, better negotiating power, all things that we've talked about on this channel before. Those registered with home builders receive regular emails with incentives to purchase, so keep that in mind. For sellers, the days of quick sales at high asking prices have ended in most of the markets. Realistic pricing and patience will be essential. Sounds like something I have said before. The entry-level home sellers must meet the payment requirements of first-time home buyers. So, meaning when we are pricing a home, especially if it's in that entry-level market, you want to keep in mind where those home buyers have to be financially in order to purchase the home. Otherwise, it's going to be out of reach. Move-up and luxury home sellers must consider their buyers need to sell their current home. So we're seeing a lot more contingent offers with those buyers wanting to sell their home first to be able to purchase a new home. And then they also talk about for investors, the market has become a little bit more challenging for investors trying to make a quick buck or earn a high rental yield. We've talked about this before. If you're flipping properties, you really need to know what you're doing in this market. And if you're buying something to cash flow, it can be really challenging unless you're buying cash or maybe finding something that's assumable where the payment is significantly lower than what it would be at today's rates. And by the way, if you are interested in any homes with assumable mortgages, you can check the link below. We have a list for that. You could also set up a discovery call with our team to learn more about how that works. Now let's talk about what's going on with mortgage rates, because that certainly affects our market as well. By the way, if any of this is helpful for you, consider subscribing or share this video with someone who would find it helpful. So Logan Mohtashami, how much lower can mortgage rates go after Friday's jobs report? So what happened last week? Mortgage rates fell 0.18% last week, breaking below the key threshold of 6.64%. This is important because in the last 3 years, when mortgage rates fell from 6.64 to 6%, housing demand has improved. So we're kind of on the cusp of that. And the question is, will rates actually go lower than this 6.64%? So we have some potential this week for some rate volatility because we are getting the inflation report. So according to Mortgage News Daily, if the two key economic considerations for interest rates are jobs and inflation, these reports are the jobs reports seen earlier this month and the CPI, which will come out today, actually. So I'm recording this before that comes out. So pending these two upcoming reports, we could see some volatility in rates this week, one way or the other. It's hard to know if they will continue to go down further or if this is going to bump them back up. If you see where we're at today, we're about 6.58 on this latest 30-year fixed mortgage rate chart from Mortgage News Daily. And it's a significant drop. Here's where we were at the end of July. And then we had a pretty big drop down last week, seeing, around the 4th. So yeah, early last week, seeing 6.57. We're at 6.58, but definitely moves to the mid sixes right now, which we haven't seen since last October. So this is a pretty big change. If we combine this, if this trend stays, plus declining supply, at least here in Phoenix, we will likely start to see a little bit more traction in the market. It's really good news for sellers that they may start to see more buyer activity, especially as we get into the fall and kind of out of this summer dead time that we're in right now. But this could totally change. Rates could go back up. Inventory could start to climb again. It's really hard to know exactly where we're going. So at the end of the day, what I always say, if you have a need to make a real estate move, whether it's buying or selling, it's something that you need to do. You just need to understand the market and act appropriately based on market conditions. If it's something you don't really have to do, then maybe now isn't the right time for you as a seller. As a buyer, it could be the time to start kind of looking around and seeing what's available if that makes sense for your budget. Everyone is different, but there are some advantages to be had as a buyer right now. And as a seller, it can be a bit of a challenge just depending on location, price, condition, all of that good stuff. Make sure to check the description below for the resources I mentioned in this video. Thanks so much for joining me this week, you guys. I will see you next week on my next market update.